Okay, hello everyone. Hello, ladies and gentlemen, and welcome to my webinar. If you could please confirm that you can hear me okay, that would be wonderful. Thank you very much for joining in. Yes, you can hear, this is amazing. Thank you very much for joining in. This webinar will be all about how to keep more cash in the bank, improve cash flow, and also impact your business growth. It's a webinar series that I'm doing for businesses that are predominantly the agencies and service-based businesses. I tend to do one webinar every month and invite people through social media, LinkedIn, and so on, as well as obviously through my email list. If there are any topics that you are interested in, if you please let me know in the chat box or email me afterwards. I always welcome feedback and also any ideas for topics that you would like to discuss and basically learn more about in those webinars. I'm going to start with a very brief introduction. A very brief welcome and introduction, and then I will get right into it. There's a few things that I want to talk to you about today. I probably will be talking for about 45 minutes, and then we've got time for questions and answers. I tend to go quite quickly in these webinars, so I hope you're ready to be able to make some notes. And what I always recommend is that you make notes on certain aspects that you found very useful and you think you would like to implement in your company. And obviously think about who in your team could implement it, because not always all the, what I'll be talking about, it does not always mean that it's up to you as a founder, business owner, or managing director. That is up to you to implement it. Very often you will have your team members, and there are certain things that you can delegate to them. So have a think about that as well. I would really encourage you to also turn off all distractions. Like I said, I do talk quickly. If you think there's something that you didn't understand, if you just please let me know again in the chat box. I'll try to monitor it as much as possible. If you do have any questions, however, I would really appreciate if you use the Q&A option in Zoom. It's just much easier for me to take a note of the questions and make sure that I've answered them all. So why I created this masterclass? So like I mentioned, it's a series of masterclasses that I've been doing usually about once a month. These masterclasses are for business owners. Therefore, what I try to do as much as possible is to simplify them and create content that is much more useful for a founder, for someone who's running a business, not necessarily has got any finance or accounting knowledge. I know that financials of a business, particularly that when you're growing, they can be quite complex. The issues that can be time consuming, and my aim is to simplify them, help you with any maybe feelings of uncertainty, or maybe you worry that your financial situation is not very visible to you and not really clear to you. These are the sort of things that I really want to help you with in my webinars. In general, also, I consider it a personal legacy. I do like to talk about finances. It's a big passion of mine. I started the masterclasses with a series on financial confidence. So that was back when I used to live and work in the Middle East. And this is how it started. This is how it started, and obviously now I decided to carry on with it. So like I mentioned, the masterclass is for you if you're growing a business, if this is something that you really want to look at, because obviously you're building a business. You might have situations where things are a little bit more complicated. You are in a situation where you would like to generate more consistent cash flow. You want to make sure that you've got money income for yourself, for your family, for your team. Your plan is to grow your business, and this is basically your main goal, and you want to take your business to the next level in the next year or so, or in the next few years. And also, if you're looking to get what we call financial peace of mind. It's often what I hear from business owners and entrepreneurs. Obviously, having that cash and in general financial situations can be, it's often a cause of a lot of sort of worries and sleepless night. And what we want to do here is that to help you again as much as possible, clarify things so that you then can have more energy and you can focus on delivering service to your clients, right? And also, my aim as well is to simplify things, because what I don't want is the situation where you have to spend a lot of time sorting out your financials. So obviously it's about simplifying and what you can delegate as well. My name is Agi, for those who don't know me. From what I see, the attendees here, majority of you know who I am. I'm sure you've heard of me. Try to be as active as possible on LinkedIn. I set up a company, CFO for Growth, last year. And what I do is provide a virtual finance director service and virtual finance team for growing businesses. Predominantly, we concentrate on working with service-based businesses and agencies. And what we want to do is to help them and partner with them to build a more profitable, more efficient business. A lot of our focus is on profitability and on cash flow. Hence also these webinars that we're running. The webinars are both for our clients and obviously prospects. They're free, and I really encourage you that you take part. Again, ask questions, because I will be able to then maybe answer questions that are much more tailored to your business and to your situation. So what are we going to be talking today about? So there's the four main topics. We'll be talking about the common mistakes you make when it comes to cash flow management, and basically mistakes that might be costing you cash in the bank. Why growing revenue and improving profitability does not mean that you're going to have more money in the bank. We'll be talking about the difference between profitability and profit and cash. We'll discuss the key areas that you need to focus on if you want to improve your cash flow management, if you want to improve your cash flow position. And then I will discuss briefly 3 financial systems to master, and systems that you should have implemented in your business in order to be able to manage cash really well. And then obviously, as a result, be able to grow or scale your business. So obviously, the main goal for this masterclass is that you basically as a business owner find ideas, actions to implement that will help you feel in control of cash flow and of your cash flow position. So I'm going to, like I mentioned, I'm going to get right to it. And to start with, I want to just mention a few points on why cash flow is so important, and obviously why do we need to, as business owners, why do we need to put our focus on cash? So there are a few reasons for that, and the first one is quite obvious, right? Because shortage of cash, it causes a lot of stress and a lot of sleepless nights, and I'm sure we have all experienced it. We've been now recently through a very difficult times. I know a lot of business owners who have been actually thriving during the pandemic and doing really well, but for majority of us, has actually not been the case. When we are in the shortage of cash, all we can think about is cutting expenses, delaying payments, and it's very difficult, I think, to then concentrate on what we want to achieve and on the expansion of our business, or concentrate on a really great quality service that we want to deliver to our clients. The next point is that when we are expanding or when we're growing our business, there is a lot of new questions, a lot of new challenges and issues coming up. And if you are new to, if it's your first business and you have not had that experience before, you will realize that the issues are not often what you expected. And financial issues, financial management is often, not always, but often one of the biggest worries, also one of the biggest causes of why businesses fail, which is quite a pity, because I think a lot of it could be prevented, basically. What happens is that when we're growing, we have cash, we've got money coming in, we might feel very comfortable, and therefore we start spending money a little bit too loosely. It does happen quite a bit. And then what happens is that if we do get some opportunities maybe to invest, then we realize that maybe we do not have any more cash available when opportunities arise. And then another point is that we do need to think about the future, and any big crunch points that might happen in the future. So cash management, it's not only what's happening now in your business and the current position and the current bank balance, but it's about what can we do to improve it in the future? Like, can we put together a plan for the next 90 days or 6 months or so to improve our cash flow position in the long term, and to feel a little bit more secure, more comfortable, more in control when it comes to cash management. And again, the current climate is not making things easy. A majority of businesses have to think about the fact that the furloughs support might be ending soon or is ending soon. We've got deferred tax payments, maybe arrangements with inland revenue, with HMRC, in terms of how we're going to pay the taxes. And we might have outstanding VAT or PAYE or things like that. And obviously we need to think about how we're going to repay. Another thing is that our clients also are affected, and they also might be in difficult cash flow situations. Therefore, they will be withholding payments to us. So all that has got obviously a really big impact on our businesses, and it's not always a positive impact. Now, what's really also important to understand is it's cash that fuels and drives our business success. This is how you then can create wealth. If you have cash, you can create wealth, because you can withdraw money from the business, or you can reinvest money in the business. This is how you can really well support yourself and your family, and obviously your team, because that's also a very important aspect, right? That's why it's really crucial as a business owner that you understand how cash flow is working. I just brought up here as well a few statistics, because obviously when it comes to, again, finances and cash flow positions for business owners, the statistics are never really working in our favor, which is again a pity, but unfortunately that's the case. We've got a lot of business owners who, first of all, do not feel in control of their cash flow. Business owners who suffer because maybe basically they're being paid very late. And as it says here on the slide, 78% of SMEs are in a situation that they're being paid a month beyond the payment, at least a month beyond their payment terms. And for a small business, it can be a really, really difficult situation. Obviously, we've got a lot of debt taken on now. Majority of businesses, a really great number of businesses, have taken the bounce back loans. As you can see here, since May 2020, every minute 3 bounce back loans were issued. We obviously had the CBIL support as well, in general, governmental support and government-backed loans. But we obviously need to consider that businesses are in debt and really need to step up on the cash flow management in order to repay it. And the next point here, that is really important, is that misconception about cash. And this is what I often talk about in my webinars, because a lot of business owners think that once the revenue grows and the business grows, then this is where sort of the issues finish, because obviously it means that they're going to have the cash in the bank, cash to invest, cash to pay their team, cash to purchase anything that they need for the business. However, the reality, unfortunately, is very different. And really, a lot of clients that I've signed up that work with my company actually have started, reaching out for our support when they felt the fact, and often even really very surprised by the fact that, what's happening? How is it possible that I'm making all this money, my business is growing exponentially, but every day I'm just worried about how I'm going to make payments to suppliers. I'm really late with payments to suppliers. I have to take out loans and so on. So obviously this is, again, another reason of why it's really crucial to understand this concept. You've got here a few reasons of why cash flow suck. Why does cash flow suck when you grow your business? Okay, so this is like I mentioned, it's unfortunately this is the case. When you grow your business, you really have to watch your cash flow very regularly on a weekly, monthly basis. And to be able to do that, there's also systems that you have to have in place, because obviously it's not so easy. But the reasons why cash flow sucks when you grow your business are because like I mentioned, when you grow your business, there are more challenges and things that there are a lot of unexpected challenges that, yes, they can be prevented, but like I said, they really take up your headspace, and maybe you don't really have time to analyze, to look into your situation, and maybe, to improve things, to then it would then improve your the cash flow in your business. You don't have procedures and processes in place. So obviously we sign new clients and so on. And basically it really takes over. The delivery takes over the time that we take, to deliver, to onboard the client, to deliver to the client. This is our focus. And obviously, understandably, because at the beginning, particularly when we're growing a business, it's the sales and the delivery that is our focus, right? And there is a lot of financial admin in general, processes and so on, that maybe just they're put on back burner. But then what happens is that basic cash, even though we sell, the cash is not coming into the business, or not as quickly as possible. And what we say as a result is that cash is tied up in the working capital. And I'll be explaining in a moment as well what it means. And like I said, I hear that complaint really even too often. I would say that we're making money, so why is there no cash in our bank? And the reason for that is because of the timing issue. And because of the fact that having cash is different to being profitable. And we've got situations, and a lot of situations when it comes to business management, is that even a business that is profitable is possible for it to go bankrupt because of the lack of cash, or because of cash of mismanagement. And as a matter of fact, it's one of the biggest reasons of why businesses fail. So cash it's really important to understand the timing and the issue between cash and the profit. Cash is the money that you receive when clients actually pay, and obviously when you pay for the expenses, right? And profit is the value that your company gains from providing services or goods. So in other words, profit, we've got it displayed in the P&L, and it's displayed when the transaction happens, but it's not when actually you receive the cash. So this is obviously a difference. And we've got a few examples here just to illustrate this point, that when profit doesn't equal cash. For example, if you've got credit terms for your clients, it's one of the most common ones. As an agency or service-based business, very often you will not be paid straight away. You won't be paid upfront or at the point of when work happens. You might be paid a deposit, or you might be invoicing on certain milestones, or maybe having retainer clients and so on. But it's really important to understand that obviously we do have the credit terms with the clients, which means that they might be paying you later. When you've got set up payment terms with inland revenue, for example, when you're delaying payments to suppliers, right? These are all these instances that will happen, that will then differentiate and the cash and the profit situation. Or when you pay yourself a dividend, right? A dividend is not a business expense, therefore will not be registered or reported on the profit and loss account. Or when you purchase an asset, this is another very, very common example. If you decide to purchase computer equipment for your team, for example, this will show on the balance sheet and will be depreciated over time. Therefore, depreciation will be your business expense. It will show on the profit and loss account. However, the purchase of that asset, it will not. It will only be shown on the balance sheet. And when it comes to cash flow management, these are the biggest mistakes that I see business owners make when it comes to this topic, and particularly when they're growing their business. And these are, again, you will see that these are mistakes that can be prevented, that really can be tackled fairly easily. And again, I'll be showing you how to do it in this webinar. So first of all, that we always think that it's about sales and that sales will fix everything. And it's very important to understand that it's not the case, okay? Obviously, particularly when we're growing, when we're starting up, yes, we all want to make sales, but at the same time, we really need to consider the profit they're making from the sales, and also consider when the cash is coming in. Another mistake and another issue that sometimes I see with business owners is that they only look at the bank account, and this is how they will judge the financial situation of their business, right? They look at the bank account, they have money in, there is probably certain balance in their head where they feel comfortable with it, or they maybe start being uncomfortable. And as long as they log in and they have that money, this is fine. If they log in to their bank account today and they don't have that balance they're comfortable with, this is when they're starting to panic, and it might be then a little bit late in some circumstances. Another thing is that if we do, as business owners, review any financial statements, in most cases, we will be only looking at the profit and loss account. If we do that at all, even, because I know that many of you will not be reviewing your statements regularly. But obviously, even if we do, usually we just look at the sales, the expenses, and if we made profit or not. And obviously, this is not where the cash is showing. Cash available to you will be shown on the balance sheet. I will show you a few tips and tricks on like how to look at it without spending too much time on it. But it's really important to understand that your cash and how much money you actually have available and what your financial position is from cash perspective will be shown on the balance sheet, not profit and loss. Another thing is that we often think that if the cash in our bank account increases, it means it's always good, and if it decreases, it's always bad. It's not always the case. Whenever you're reviewing your cash position, it will always have to be reviewed in a wider context, and you always have to think about if it's a surprise to you, because if it's a surprise to you, you've got too much cash or too little cash, obviously it means that something happened that you must review. And another thing is that is the procedures, processes, and systems. A lot of that, you can have set up in place once, and then it will serve you, in the long term in your business, will help you with things like, incorrect invoices, delayed payments, maybe wasted time, because there's a lot of repetitive admin when it comes to finances and how you're dealing with these aspects that probably can be tackled these days with technology, or like I said, with putting together a procedure that makes things easy to either delegate or outsource or something, or even tackle yourself, but in a much quicker way. And another thing is obviously that we don't want this just boring for us. We don't want to look at a spreadsheet with rows and rows of numbers. So basically, we just discouraged, and we avoid the whole thing altogether. And particularly if we are in a situation that is not very favorable, because I think it's our nature, it's common nature to avoid our finances. Right. So. And now what I want to be talking about is the main part, the five key focus areas, okay, that you must have in place if you want to grow cash in your business, and what these areas what these areas means, and the reason of why you want to focus on them is because what you want to do in your business is to move it from a business that is cash consuming to a business that is cash generating, as we call it. First aspect and first area that I would like you to focus on is your working capital. Okay, this can be a fancy financial term. If you're growing your business, if your business is growing, obviously it's really important you understand what working capital is. But in simplest terms, working capital means that are you producing enough cash to be able to pay for your current obligations? So this is really important to understand. It's not necessary if you're making enough income, but if the cash is coming in, to make sure that you'll be able to pay your bills, your taxes, your payroll, and so on, or even pay yourself a dividend, and so on. And there are a few things that you need to understand here, and I'm just going to simplify it in a way as easiest way as possible. Is that you need to be able to review and manage your payables, so the money that you owe, and your receivables, money that you own, that you are own, so that or obviously clients, or the money the clients owe you. So it's the two most important aspects, because you're a service-based business. Obviously, when it comes to working capital, really there are three components. We also have inventory, but the inventory management is outside this webinar, because, like I mentioned at the beginning, it's much more directed for service-based businesses and agencies. Therefore, like I said, what you need to focus on is your payables and receivables. And what we want to improve in our business here from this perspective is what we call cash conversion cycle. There are ways to calculate it and so on, but it's not something that we necessarily need to know and discuss here. But but I will show you how to find the numbers for this in Xero in a really, really simple way, because obviously these days the way it works, as long as you've got your tech updated, you'll be able to really find these numbers very quickly and see if you're improving or not. Xero is just does it for you automatically. With cash conversion cycle, is what you should understand is that basically it's the amount of time it takes you to turn profit into cash. Or in other words, in the amount of time it takes you from, issuing an invoice to obviously then making sure that you've got money and you pay your payables in time. So that's the cash conversion cycle. And from that perspective, improving your payables and improving your receivables, so what we want to do is we want to have a look at the balance sheet, okay? Because in the balance sheet, this is where your financial situation, your cash position is hiding. Your cash is not in the P&L, your cash is hiding on the balance sheet. That's why it's really important that you review the balance sheet as well. At least once a month, you should have a review with your accountant and have a look at it, because as long as your Xero is updated, again, this is a document that you can just pull up in Xero and look at these two important numbers. And these numbers are your accounts receivables and accounts payables. Accounts receivable, so your debtors. And what you want to do here is you want to reduce your debtors balance. And obviously we have accounts payables where you want to increase your creditors balance. It's simple as that. It can be, maybe simple. Obviously it's not easy, as people say. I will give you a few tips on how to do it, because with increasing creditors balance particularly, it can be quite tricky. But both of these areas, this is something that you need to look at and regularly see what the results are and what your outstanding days are. So how long does it take for your client to pay you the money for the invoices, or how long does it take you to pay your suppliers? Okay, so these are the two numbers that are very important to monitor, and I will show you in a moment as well on how to do it. So how to improve capital? Again, like I said, so you want to reduce your receivables, so that it basically, in other words, you want to get paid faster. It's very simple. There are a few ways to do it and to improve that. And I've got just a few examples here for you on the slide. You can ask for deposits. Obviously, before you start working with a client, you can agree invoicing on milestones, so certain aspects of the projects that have been accomplished, and you receive obviously the money that you can invoice, and then therefore receive the funds while the project still is ongoing. You can use some automation and set up direct debits if that's possible. I really encourage that. This is something it can be very, very, very literally life-changing for your business if you have a solution like Go Cardless in place. Go Cardless is, first of all, it helps you save time. It's not very expensive, but it really can help cash flow quite a lot. And these days, people are quite comfortable. It's a very, very popular tool, and people can be quite comfortable in terms of signing up and agreeing to having a setup direct debit by Go Cardless. And for example, another aspect of decreasing your receivables and getting paid faster is that you've got someone in place who is responsible for it. Unfortunately, what happens is that it's daily operations, daily tasks that we need to accomplish, take us away from from financial admin. We look at it on a monthly basis. Whereas it's really important that we follow up with our clients when it comes to our payments, okay, when it comes to our debts. We can follow up with them even before the deadline, the payment date, just to check if they're happy with the invoice. If they have any queries about the invoice, we can follow up straight after the deadline, then within 7 days and so on. We need to be doing regularly. And I have really encouraged this, particularly if you're working with bigger customers, with bigger companies. Unfortunately, what happens is that corporations can, be, it's not necessarily that they're bad payers, but they're very, very particular about the invoices that they receive, and very particular about the payment runs. So I always encourage that you are in a constant communication with your clients to make sure that you're getting paid. And therefore, it's best to have someone accountable and someone on your team who is in charge of it. And obviously, the other side of the working capital is it's about increasing your payables, okay? And this is a tricky one because it's not like you can just stop paying your suppliers, but it's important to understand and find maybe ways, if you are in a tricky situation, what can you do to maybe extend these payment terms? You can negotiate, always be honest about it though, because nobody likes late payers. And particularly if you're an agency or a business that uses a lot of freelancers, maybe smaller businesses, however, they might be, certain companies you want to cooperate with because they're very good, they have very good quality support, help, or very good freelancers. Obviously, if you delay payments, then they might not want to work with you. Therefore, it's really important to be basically honest and upfront about your situation. And with certain things, like with taxes, you can make arrangements in terms of installments, right? So especially these days, you've got time to pay arrangements, for example, with the inland revenue, that really can help your cash flow position and will help you extend the time when you have to make these payments, basically, and when the payments are due. I also recommend that you download the guide. So we've got a free guide on our website on how to improve cash flow from the aspect of debtors management, and how to get your clients to pay you on time. It's a really comprehensive guide with like a full list of items that you can implement in your business that will then help you with that particular aspect, okay, with clients not paying you on time. There's really a lot in your power that you can do so that at least you can help the situation. And the second key area is about cash flow planning and cash flow forecasting. Like I mentioned at the beginning, that statistics show, and also from feedback I receive from business owners, is that they don't feel in control of the cash flow. And the truth is that the only way that they can really deal with that fear is that they have cash flow planning and cash flow forecasting in place, because it really changes the way you think about cash flow and the way you think about your financials. Especially that there is, with tools available now, you can create multiple scenarios of where you are when you can be with your cash flow, and you are able to predict what will happen in your business, or at least prepare yourself for certain situations, for certain cases, that if something like this, a certain event should happen, then you'll be prepared. You will know exactly how to react, and you will know what to do to basically help that situation, and you will know in advance. But it requires that you do spend a little bit of time planning and a little bit of time reviewing what your cash flow position might be in the next 90 days. Obviously, there is a lot of other benefits of why you would want to look at cash flow planning and forecasting. Like I mentioned, you will be able to see the outcome of your decisions, because that's another thing, right? You, as a business owner, and again of a growing company, one of the biggest decisions you want to make is, for example, when can I hire someone, right? Can I afford hiring someone? If I decide to take a loan, will that impact my cash flow, right? I will get some cash, a little bit of cash now, or some cash now. However, then I'm going to have to repay it. So obviously, all that you can then put in your forecast or in your cash flow plan, and really see the impact on your business and on your business financials. Another thing is that obviously what happens if your clients, if you worry that your clients might be paying you late, like, or you've got one big client, or you've got two big clients, and you're concerned that they might be delaying payments. Again, you can incorporate it in your cash flow planning scenario and be able to maybe come up with solutions and be ready to close that cash flow gap. Another aspect is about obviously paying yourself, because in the end, the business is there to support you and to support your family. You might have different goals for your business. You might want to sell your business or simply grow your business, pass it on to your children. And in all these cases, it's also about rewarding yourself for the work you're doing, right? So again, with cash flow planning, you're able to then look at the amount of dividends you're able to pay. You can pay yourself. Another thing is as well that it's a lot of it is a bit of a sort of psychological impact too, and it's a bit of a kick, right? Because if you are worried that your cash flow might be really going downhill, maybe there's certain events, and then you're seeing that in 3 months actually situation can be a little bit tough. It just will give you that additional kick to generate additional revenue, income, have a think about other products or other services that you could maybe implement and roll out among your existing clients. And you review, then you spend time maybe reviewing your profit and loss. So look at your revenues. Where is it coming from? Can you increase it in any way? Can you increase number of transactions? Can you increase average transaction rate? Or even look at it from other perspectives, from the cost perspective. I'm always really cautious about the comment of just cutting down expenses, because a lot of business owners I work with, they say that it's the most typical comment when it comes to like accountants, and that they make when it comes to improving cash flow, that just accountants always just tell me just to cut spending, and this is not what I tend to say, and it's not what I want to say here. However, what happens again, if you are a company that experiences a growth, there is very often some wastage when it comes to expenses. So what I mean by that is that there's certain that we start to stop watching the smaller amounts, because it just seems very small. But then what happens is there's quite a few of these small amounts that add up, and maybe actually upon a review you would realize that these are funds that could be utilized a little bit better, and could be utilized in a way that they bring then a return on investment. So again, it's just something to have a look at. And another part of the cash flow planning is building your cash reserve. And truly, if you want to be in control and feel in control of your cash flow, and really have that sort of that security as well, that for example you can take certain risks in your business, because that's also necessary. You have you've got an idea and you want to implement it, or you would like to invest money in certain sales or marketing campaign and so on. To be able to really comfortably do that, you need to have cash reserves in place, and nothing will help you better, and nothing will make you feel better unless you've got at least 3 months of operating expenses in your bank account, that it's there, so that you know that your taxes are covered, that your payroll for the next few months is covered. Also, this will help you with any fluctuations, and with the sort of roller coaster ride that we have as business owners, that certain months are really good, other months are not very great. And I know it's not very easy to build a cash reserve, and especially in these circumstances, I see that it's quite a big issue and a big challenge for businesses. However, it is possible, and if you make a plan, you can build a cash reserve. Like I said, some people say it's 3 months of operation expenses. Absolutely, this is a very good way of looking at it, or also 10 to 30% of your annual turnover, depending on your situation. Really, the amount of cash reserve will really can also be quite it will differ from business to business depending on your circumstances. But also have a think that having a cash reserve will save you some costs, because you won't have to turn into overdraft or credit cards, or maybe loans that can cost you money. and what is really possible that with a little bit of planning, actually these costs could be avoided. And as in with everything, and when it comes to forecasting and planning, the same with cash forecasting is that we will not have a crystal ball. However, I always say that cash flow planning and forecasting it's how we stack the odds in our favor. This is really how we can help our business grow, and how we can again help ourselves feel very secure and in control of our business. Right. I'm just looking at the time. I'm going to speed up here now because it's really almost running out of time, but it's not much more left. And yeah, so we've got a few points left here, and then we'll discuss the financial systems. So the next point here is the procedures and processes. Okay, and I've mentioned here a few examples on the board. Is something on the slide here of what you can have in place that will help you, not only from cash control perspective, even though that's also really important, but also from time control perspective. Because what I also see too much is that business owners spend themselves a lot of time doing financial admin. Even when they have a bookkeeper and accountant in place, they still get tied up into certain queries, missing invoices, cash flow issues where they may be having some, looking themselves on a spreadsheet and trying to work out the cash flow and where they are in terms of the cash themselves. It can really, it can be really time consuming, and it's really taking away your time from actually serving your clients. You can have processes in place for invoicing, for timely invoicing, accurate invoicing, obviously for invoicing deposits, milestones, and so on. Then chasing debt, this is a really big one. Okay, there are apps now that will really automate debt chasing for you. The only thing is that you just need to have it set up, and then set up a few email templates and so on, and there will be this then process in place that at least your clients will receive polite reminders in terms of sort of the debt chasing, to make sure that at least that part is sorted, that there's something or someone actually following up on your behalf when it comes to chasing invoices and asking about what the situation is with the invoice payments. And obviously any procedures and processes are really important because also they make things replicable, right? It will take the pressure of you, and then they can be passed on to a member of the team. And again, it's about time saving and it's about control and having the cash control, but also it's about time saving for you. I mentioned here, yes, so that chasing, so Chaser is a really good app, for example, but there are many more in the market now, but it's something that I use. It's Chaser, that really that helps you automate that process, and this is just one of the examples for cash flow processes and for cash flow management. Right, the next one is to monitor cash, and also we need to monitor cash and business cycles. So there are two things that are important here is that we monitor where we are with our cash and how we operate in our business, and can we speed things up in order that we are paid earlier, right? When it comes to our business, as working as an agency or service-based business, we've got certain business cycles that we have in place, and these are sales cycle, right? So time from like us presenting the offer to when the clients say yes. We've got the delivery cycle. It's when we're delivering the service, and also we've got the billing and payment cycle, right? It's when we issue the invoice and then we get paid from the clients. So this is something that it's really important to monitor and see if you're able to work out how many days each cycle takes for you, and are there any ways where you can improve it. Okay, again, this is how you would be able to then, if you are able to improve any of these cycles, of these parts, then you would be able to improve obviously and increase the cash that you have, because you would get paid faster. So this is really important, one of the really important factors to understand, because ultimately we would like to be paid straight away before we finish delivering the service, but that's not a reality, and very rarely it happens unless you always have the retainer clients. However, there are ways where you can shorten these cycles or manage them a bit better so that you do get paid at least partially during the delivery, right? Not only after the delivery, but during the delivery, and certainly the billing and payment cycle can be also shortened. Then I mentioned monitoring the debtors and creditors, right? I'll show you an example of report that you can pull out from Xero. That is really, really easy. Also monitoring the AR days, so accounts receivable days. And this is a very important KPI, but very straightforward KPI, basically meaning how long does it take your clients to, or on average, to pay you? And then AP days, so accounts payables days. How long does it take you to pay your supplier? Really very simple KPIs, and again very easy accessible for us, because at any time we can just look at them through our accounting system. And I mentioned Xero, but really cloud-based accounting systems, they will be able to have that sorted for you. Then we've got the current ratio. The current ratio is something that I really encourage you to look at. Again, very easy to find for us in Xero, and basically this is a financial metric that tells you if your assets, in what you have, the cash and that you have in the business, are you able to pay your obligation or cover your obligations with the cash that you have in your business? And it looks at cash and your accounts receivables, and then measures this amount against the liabilities or the short-term liabilities that you have in your business, so the bills you have to pay. And what we're looking for in the ratio is 2, so that you've got double the amount of assets in comparison to the liabilities. It's actually quite a difficult result to achieve. However, it's just so you know that this is what we're striving for. And I've got here an example for you from Xero. Basically, this is an example. This is simply a printout from a report. That is one report in Xero, and it's called management report. And from that report, I have taken parts of the executive summary and also showed you an example of the aged receivables, of how it looks like and how you can monitor it, again, very easily. And then through the executive summary, we've got the KPIs that I mentioned, right? So we've got the debtors and the creditors balance. We can see straight away if we're improving or not in that particular line. And then also we've got the debtors days, the creditors days, and the current assets to liabilities, which is the current ratio. So in this example, our ratio was 0.2 to start with in March, but it has improved massively in April, where we've got 1.1. But we would be looking for at least 1.5 to even 2 when it comes to the current ratio. And similarly, this is how you can monitor your debtors and creditors days. So again, here, just as an example, debtors days actually increased from 13 to almost 17 days. So obviously this is just the system tells us that the increase, obviously it's in red, because in this case it's not really great, because it means that the clients were taking longer to pay. However, when it comes to the creditors days, that's actually decreased. Okay, so it means that you managed to pay your clients, your suppliers a bit earlier. And then final part to look at is profitability. Okay, so if we say that you've got all the things, everything in terms of cash flow management and in terms of working capital management that I mentioned before, so payables and receivables, it's all in order, and you've got still shortages, you're dealing with shortages of cash, profitability is another area for you to look at. Okay, it's obviously it's a difference between cash and profit, but the more profit you make, obviously it means that in the long term, you've got the cash then, right? Cash that you can either pay yourself or reinvest in the business. And when we talk about profitability, the one metric that I would like you to pay attention to is the gross profit, because that's another reason of why sales is not always everything. Gross profit is a metric that will show you the quality of your sales that you're making. And really, you cannot really pay your bills with sales, but you will be paying your bills with the gross profit pounds, right? With them, with the gross profit, basically, because this is then the money that is left over after you've delivered to a client. So it's a really important metric for service-based business. Again, very easy to pull out from zero, and it's just something that I would really encourage you to look at, because gross profit it will show you if you've got enough, if you've got enough profitability or from your certain services that you offer. Are your clients profitable? Are the projects that you've got in place, are you delivering profitable? And it's just something that I think, as well as business owners, we don't always pay attention to, because our targets are turnover and revenue, but we also want to be looking at the gross profit as our targets, because it's equally so important, even if it's in some aspects, it's even more important, because you will find that you will make certain sales at a different level of gross profit. You can make, the turnover will be higher, but if you gross profit, then, it's lower on that particular sale, you might end up with actually lower cash figure, right? So again, it's just another area to look at. When we talk about profitability, there are what I call 3 P's of profitability, because obviously we want to improve profitability. First review, analyze, and then improve that profitability. And there are certain aspects that we're looking at when it comes to service-based business, or an agency. Obviously, we'll be looking at pricing, purchasing, so how much we're paying, either for freelancers, any outsourcing, any other bills, and so on. And then productivity, which is also a really important aspect, because obviously it's about how we manage our team and how much our team is delivering as well. So therefore, productivity here is something to look at. It's a really extensive area when it comes to, in our businesses, managing profitability, efficient, in a really, an efficient way that we can, with certain results that we can deliver, and so on. And I did webinars on this before. If this is something that you're interested in, you can always email me, and I'll send you on one of the previous webinars. Or also, please just look out for my on my website or my social media, as I will be I'll be delivering I think masterclass on profitability maybe next month, I think, because there's also always a lot of questions about that. And then the final part is the systems, the financial systems that I would like you to have in place to be able to deal with cash flow properly. And again, remember that as a result of this, it's how you can increase the bank balance, how you can increase your cash flow, and how you can impact your business growth, because it's really the financial part of it, and how you manage your finances. It's really crucial. So the first system is the record keeping. I mean, for many people, it's just a really straightforward thing, right? Because we tend to have things we've got cloud-based accounting software now in place. Everything is in zero and so on. But for us to be able to manage this in a way that it's efficient and it's accurate, and simply useful, is that you have to have that system updated regularly. And this is not something that I see a lot. As a matter of fact, I think as an accountant and virtual FD, I do get a lot of catch-up work. So we get basically, as a company, catch as assignments when we catch up with, for example, 9 months or 12 months worth of accounting or bookkeeping rather. And really, it's not something that works in your favor, because you do need to have this updated at least on a monthly basis. If you're growing, your business has to be updated on a weekly basis without any doubt, because otherwise, nothing else that I've been talking about really works. So the record keeping system, your bookkeeping, is really the basis and the fundamental aspect of anything financial when it comes to running a business. And another system is the forecasting system. So this is where we've got forecasting for sales, so that we see your pipeline and what's happening, what's coming into your business. We've got the forecast for cash that I already mentioned, but also we have the forecast for profit. So all the three aspects, there's a few ways to do it here and to deal with it. Certainly, you probably should have a short-term perspective for cash flow at least, but also sales, which would be like 90 days, and then longer-term perspective, which would be all for 12 months, for 12 upcoming months. And the third system is the reporting system, right? Because in the end, you want to know where you are against your goals, against your budget, against your forecast, or any other KPIs that you decided to set for your business, maybe for your team, so that you know where you are. You've got that management insight, and you're able to say, that you've achieved certain goals, or maybe there are certain improvements you need to make, and what you need to then, the decision you need to take in order to be able then to grow your business and to impact further business growth. So these are the things that are really important, something that you should really consider having in your business, if you do, or improving even if you don't have, because I know that many of you will have some of that already, but have a think what might be missing, because really with all this in place, it's how you can really experience proper control and clarity and financial visibility in your business. Okay, so this is it. This is the presentation, and these are all the items, the aspects that I wanted to discuss with you. I really encourage you to download some of our guides. If you go to our website, cfoforgrowth.com, we've got free guides as well that will be very helpful on cash flow, on getting paid quicker. I think they can be they're quite thorough, they can be quite beneficial for you. You can always email me with any questions. We are running out of time here today. I might have time for one question maybe. And also, I would really encourage you to book a consultation with me. In my consultations, they're tailored to your business. We're discussing aspects or challenges that you might have, and obviously deciding on the next best steps for you, so that you get the clarity in terms of what you should be doing, in order to grow your business, right? In order to improve the challenges that you might have, or work on the challenges you might have in your business, and in order to then improve profitability, improve cash flow, and so on. But like I mentioned, it's advised that it's much more tailored to what you need, or what you think might be stopping you from taking your business to the next level. The details are here on the slide as well. If you email me, aggie@cfoforgrowth.com, I will reply to you, and I would love to hear from you. I've got here one question, at least, like I mentioned, I'm going to have a moment to answer one question.